Rubber Industry Market Review. In this session, we will have a report on the Natural Rubber Market Review by Mr. Joe Jacob. As I said, he is an independent rubber industry analyst with 30 plus years experience as an analyst with extensive experience in the analyzing the rubber market, forecasting industry trends, and formulating long-term policies and development plans for the natural rubber sector. He served the Association of Natural Rubber Producing Country, we call it shortly ANRPC, based in Kuala Lumpur, as it's a senior economist for 11 years. Before that, he worked for Rubber Board of India in various positions for 23 years. So let's welcome Mr. Joe Jacob to give a review on the natural rubber market. So Joe.
Hi all. Welcome to Natural Rubber Market Review, episode number 11. So when we reviewed the markets last week, that is 21st of March, and made observations on the short-term outlook. One important observation which we made was that market short-term outlook depends on further developments in the Russia-Ukraine tussle. And we expected that unless there is a ceasefire reaching or some kind of an agreement reaching between the two countries or between the West and the Russia, we don't expect prices gaining in the short term. So as we expected, there is no further developments in the Russia-Ukraine war, and also markets performed without any major uptrends or major downtrend. It was some kind of a sideways movement. So with that observation in mind, let us examine how the prices performed in futures and physical in key Asian physical markets. So I have 6 slides to show here. Slide number 1, chart number 1, that is showing the rubber futures traded on the Shanghai Futures Exchange. This shows the daily settlement prices at the Shanghai Futures Exchange during last 5 working days. So the prices average 0.2% higher during last week compared to 1 week before. 0.2% higher means almost zero change, no change. So average 13,430 yuan per ton, which is almost same as the previous, as the week before. That means prices perform in the way we expected. That means a sideways movement without a noticeable uptrend or downtrend. This was the average performance of the Shanghai Futures Exchange. And coming to chart number 2, which is showing the Singapore Commodity Exchange, which is the TSR 20 is the popular grade traded on the Singapore Exchange. Similar to Shanghai market, here also prices average 0.2%. 0.2 means less than 1% or almost 0%, or in other words, almost no change. Prices average almost at the same level compared to a week before. So average price during last week was $171.6 per 100 kilogram. Now let us see what happened to Osaka RSS 3 futures, chart number 3. RSS 3, or out of the total natural rubber traded, volume of natural rubber traded in the world markets, around 70% is traded in the form of TSR, and RSS constitutes only less than 20% of the total trade. So RSS is not a major grade in the international markets, but the most popular grade traded on the Osaka Futures Exchange in Japan is RSS 3. But in sharp deviation to Shanghai markets and the Psycho market, RSS3 futures traded on the Osaka Futures Exchange gained 3.7% during last week. I mean, average during the last week was 3.7% higher compared to a week before. There are two reasons why RSS at Osaka performed better than Shanghai and as well as the Psycho market. There are two reasons. One, because of the off season, there is shortage of RSS. So there is a shortage of RSS, and RSS3 has specific demand. It has actually specific demand, and there was a shortage because of the off season. That is one reason. Another important reason: rubber futures traded on the Osaka exchange are sensitive to the strength of Japanese yen against the dollar. So whenever yen is weak against the dollar, investors will be interested. Investors find trading on the Osaka exchange economically more attractive. So that means a weak yen attracts more investors, more traders to the Osaka exchange. So in fact, that was a positive factor, favorable factor for the Osaka RSS3 futures last week, because yen was relatively stronger against the dollar. I mean, yen was relatively weaker against the dollar because dollar gained last week, and that means yen was relatively weaker against the dollar during last week, and that also helped the RSS3 futures on the Osaka exchange. Compared to the Psycho market and TSR20 market, as well as the rubber futures traded on the Shanghai market, Osaka market performed far better. It averaged 3.7% higher. Now we go to the physical market, chart number 4, which is showing the daily prices of STR20 at Bangkok and SMR20 at Kuala Lumpur. At Kuala Lumpur market, SMR20 averaged 0.6% lower compared to a week before. And at Bangkok market, the popular grade is STR20, which averaged 0.6% lower compared to a week before. That means in both Bangkok and Kuala Lumpur markets, STR, or maybe a general term is TSR, which is accounting for 70% of the representing 70% of the global trade in natural rubber, averaged 0.6% lower compared to a week before. 0.6% is less than 1%. That we can roughly say that the change from the previous week has been marginal. Now we look into the prices of RSS, physical prices of RSS. We'll go to chart number 5. There are two important markets, and most important market is for RSS in the international market is RSS3, traded at the Bangkok markets. Bangkok market RSS3 averaged 1.2% higher. As I mentioned before, there has been shortage of RSS in Bangkok, and that is reflected in the price of RSS. That means compared to TSR grades, RSS performed better. At Kottayam, average price of RSS4 was actually, there was no change compared to a week before. Average price was around $226 per 100 kilogram. There is no change from the previous week. Now we're going to chart number 6, which is showing the prices of latex. There are two important markets. One is Kuala Lumpur market. Kuala Lumpur market averaged 1.9% lower compared to a week before. And the Bangkok market latex prices averaged almost negligible 0.04% lower. In fact, what is coming out here in Kuala Lumpur, which is a global hub of the glove industry, because countries are opening and countries are opening and lockdowns are getting lifted, so the industry is perceiving some kind of decline, not decline, maybe slowdown in the demand for glove. So that could be one reason why latex prices in Kuala Lumpur average 1.9% lower. So these are the, so we have 6 charts here. From this 6 chart, what is coming out is that the major traded form of natural rubber is TSR, or which is known by different names, trade names in different countries. Almost averaged almost at the same level compared to a week before. There is no major jump or major decline during last week. That is one important observation. And now the question is, what can happen in the short-term future? So as I mentioned in the previous week, short-term outlook depends on what is the further development in the Russia-Ukraine war. So is any possibility of a ceasefire in the short term? So unless that is coming in, we can't expect a major recovery or uptrends in the prices of natural rubber in the short term. In fact, we have to consider 2 factors at this point of time. One is sentiment will be kept down because of the dominant influence of the geopolitics. Sentiments will be kept down, and investors in the speculative market will be they will be adopting some kind of a cautious step in view of the risk and uncertainty. More than that, we have to expect that dollar is likely to stay strong, because in the next meeting of the FOMC, Federal Open Market Committee of the US Federal Reserve, the Federal Reserve there is a feeling that Federal Reserve is likely to go for an aggressive rate hike. So last week, 2 weeks before, Federal Reserve increased the rate by 0.25%, and the next time it can go for, maybe it can even go for a 0.5% rate hike. So market feel like that. So dollar is likely to stay strong. A stronger dollar is not good for commodities in general and natural rubber in particular. Stronger dollar. So in the short term, sentiments will be kept down because of the geopolitics, and also we are also expecting a stronger dollar to remain in the short term. Coming to physical market condition, supply will remain low, because in major rubber producing countries in the Southeast Asia, it is an off season of supply because of the annual wintering of rubber trees. So supply will remain low. That is a positive factor. But at the same time, we have to consider that outlook on demands has been weighed down, because marketplace believe that the Ukraine-Russia war and also the sanctions announced on Russia can have major negative implications on the global economy, on the global trade, as well as on the global supply chain. And also this geopolitical issue has also worsened the what is called the issues confronting the automobile industry, especially chip semiconductor shortage and also shipping costs. So all these factors are having negative implications on the global economy recovery momentum, and the rubber demand is strongly related to what is happening in the global economy and also in the auto sector. In fact, actually more than 75% of the global demand for natural rubber is coming from the transport industry or automobile industry. So whatever happening in the auto industry is pivotal to the natural rubber demand. So demand outlook at the moment is weighed down. At the same time, we have the off-season of supply, that is a plus factor, but that plus factor is actually over-dominated by the negative demand outlook. So putting it together, the physical market conditions are not favorable for a major increase in the prices in the short term. Prices can move some kind of what we say a sideways movement without major uptrends or major downtrend. This is a short-term outlook. Thank you very much.